All right, again, welcome everybody, and this is the Thoughts and Observations. It is Tuesday. It is, again, April 16th. It's Holy Week. We have some, again, I make that comment because of the main fact that this is a week, and we all have seen the horrific scenes with Notre Dame Cathedral in Paris. And, it's really an amazing thing because the country needed to come together. It was starting to become very divisive with the yellow vest movement, and now it seems that President Macron was able to kind of make people realize that there's something more than maybe this social wave of protesting, and that during this Holy Week, people are reflecting on maybe changes. And with that said, it's also a time where people go on family vacations. It is Easter week. So Passover, it tends to have not just a domestic here in the U.S. effect, but a global effect, and the way people maybe are perceived as wanting to work or put things together, or capable of working, or capable of putting money together. So it was tax day yesterday. We're past that now. And again, in this week, and especially today, Tuesday, we have a few economic numbers which I don't believe are going to be as prolific to impact the market, such as industrial production at 9:15, and again, home price index, as I stated a few seconds ago. What is going to be probably have a more impact on our market would be China, believe it or not. Tonight at 10 p.m., China's GDP, industrial production, and their retail sales come out at 10 p.m. That will be paramount, I believe, as an impact in the market. And it seems that maybe if we take a look at the overall, as I'll go through today, if we take a look at the pre-market session, and I'm just going to run down the scans, or at least I'm going to run down what the market is doing in terms of percent changes. There's really not a lot today, gang, that sticks out. Energy stocks are up just a tad in the pre-market session. There's really, if you take a gander here, these are not real big moves in the financials. I do believe this week, as far as earnings are concerned, we have, again, Johnson & Johnson already came out with a good earnings report and a nice reaction. We have Netflix after the close, United Airlines, United Healthcare this week. We have USB, we have Regions Financial, Keystone Bank. So there are BB&T. Again, those are more regional and what we may have considered mid-cap to small-cap stocks in the financial banking sector, which if they come out with better reporting earnings, it will impact, possibly have more impact, not just on the subsector ETF, the KRE, but also impact the Russell small cap. So we want to take a look at the regional banks, and the as you can see, there's no real big movement there in the markets in the overnight session. So everyone's more than likely waiting for those earnings reports later this week. And we get into credit cards. We see a company name like a Visa, which is broken out significantly. If you follow me with the lower left-hand corner of your charts, here's the breakout of old highs in Visa. And so the financial business or credit card segment of the market looks very similar, with MasterCard breaking out. And again, very similar, I wanted to point out with, not American Express, but the two laggards would be Capital One and American Express. So I'm not sure if maybe the latter two, American Express and Capital One, are trailing the market, or if in fact they're held back, and if we're going to see possibly stocks such as the stronger names starting to weaken. So here's the key concept in what I wanted to point out. MasterCard has had an incredible tear, and yes, it broke out of old highs. And I'm seeing a lot of them. That's a horrible straight line, and I do apologize for that. So what I'm proposing is that we get a lot of stocks that have broken out and they have held their respected pivots, especially that blue monthly pivot. The one thing that I'm not a big fan of is when stocks break out and we see poor volume trends and poor relative strength trends. It gives me the sense of maybe the rally is not one under accumulation mode, but rather the rally is under distribution mode, meaning every time we see newer highs, it seems that we might be getting funds that have been long this name liquidating and taking not the best price, but the best average price and lightening the load on every subsequent rally. That's the point that I'm trying to make. And then that money, I'm not saying that people, if you are a fund and you have 10,000 shares of MasterCard, do you get out of all 10,000 shares? No, but on every subsequent rally, if I want to get out between 230 and 240, I'm going to get out of maybe 1,000 shares here, 1,500 shares there. I'll get out of another 1,000 shares, and what have I done? I'm out of a third of my position, 3,500 shares. So over time, we start to see distribution. Now, if you don't think this is true, then let's go back and look at memory lane, where Warren Buffett, a famous identification that we provided this trading community with, was to look at IBM way back when. And what we saw with IBM was we had a low close doji near the highs, and it had a sideways action. We saw the relative strength moving lower. We saw the volume moving lower. And then all of a sudden, IBM went from about that 180 number. And I believe I can go back down memory lane with us pretty quickly here if it's possible. And again, share that number with you guys, because it was, let me go back to format symbol here. And now let's go back 3 years. And I think it is critical to be able to look at patterns and look at behaviors of markets, because patterns do, by the way, patterns do repeat themselves. And so I'm not saying that this is the exact same pattern, but if this setup looks pretty darn similar. And what is the setup that I'm referencing? So if you notice here, IBM took a nice breakout in the market, and it held above its pivot, and it held above its pivot, its blue line. But as the price action started to rise, as we started to see new highs in the market, we started to see the volume trend lower, and as the market was moving higher, the relative strength histogram was moving lower. Now, what had happened here, and I want everyone to, this is a very important case study. Up at this high in here, look what happened. How do you suspect the market breaking out of a new high, all right? Breaking out to a new high, and then there's no volume behind it, and the relative strength is underperforming. Now, when I tell you I trust the volume indicator, and when I say this is worth its weight in gold, this is worth its weight in gold. Now, this is an area and a condition in which I always fire off warning signs for everyone. When a stock makes a new high and the volume indicator that we created forms bearish divergence and new lows, and the momentum and percent change of the volume goes negative. When on-balance volume is rising, it's a conflict between the two. Which one do I trust? I trust the volume indicator that we created. I do not trust on-balance volume. Now, what happened and what's real important about IBM making a newer high? Warren Buffett was liquidating as the market was going between 180 and 185 from this high and to this high, and over the course of this period, Berkshire Hathaway, which came to announce that they liquidated 1/3 of their holdings. It was Berkshire Hathaway who was distributing, selling, liquidating, lighting their load in IBM. And the irony is that he announced that in a CNBC interview when the price of the stock was about right there. So it was right in here on a CNBC interview that they announced that he had sold somewhere close to the high when it was trading at 180. So this distribution actually was a reflection. The indicators were reflecting Berkshire Hathaway, an institution, liquidating their stock position, not all of it, but a large portion of it in IBM. So I wanted to say that the analysis and the charts have relevance. And so when we see stocks breaking out like a MasterCard, and I do not see strong volume participating in that move, and I see the relative strength weakening, I wonder, as this move goes up, and then I look at the corresponding bearishness of the chart patterns, not the reaction of follow-through weakness, but the psychological candle patterns. We have almost a dark cloud cover here. We have a low closed doji there. So we had another low closed doji here. While the stock hasn't gone down, it's showing that there is distribution in the market as it rises, and it is not starting as it's breaking out. It's not relative to the overall market is weakening. So this shows me, as well as the volume, it kind of tells me that this is a stock that is subjected to maybe distribution. Is it time to get short this? No, but I think what we are seeing is that as the market rallies and the more names that I see that are breaking out like that or did break out, I'm seeing more and more of these names kind of show that same similar pattern. This is, again, Oracle. Oracle did break out. And if you note here, it's almost the same type of pattern. It broke out. It's defending the pivot, but the relative strength is weakening and the volume's weakening. So is this a new renaissance for a higher high breakout in Oracle, or do we think over time there may be some liquidation near these highs? I think it's the latter. So rather than chase the market, I believe some of these names we will be looking and be watchful for distribution. It doesn't mean that the market's going to be a sell-off. It means that money is coming off the table. They're lightening their position, and that should cap all rallies. Now, what happens to that money? Is it going into other names? Probably is an understatement. Absolutely is the right statement. There's a lot of names that have good value, great PEs that have been, let's call it the red-headed stepchild, been ignored by the market, by investors. AT&T is one. Everyone's been waiting for 5G to come alive and do something, and yet here's a stock, by the way, gang, that still continues. And when you say, what is the performance of this company? When I look at the volume and when I look at the relative strength, I see bullish convergence in this market. Now, it hasn't broken out, but if we see some of those other names, and it's called sector rotation, asset reallocation, I think this is and these are the names that could see the new renaissance to the upside and carry the market higher. Lastly, I wanted to point out that we had talked about a few names, especially Xilinx, XLNX, in the weekly thoughts and observations, and I wanted to review that with you. So when I look at Xilinx making new highs, and then I just remember fresh in my mind when I see again a dark cloud cover, almost a low closed doji, a definite low closed doji. And by the way, if you noticed the last few charts, they're almost synonymous with the same pattern. A and B, MasterCard, had almost the same dates, the same patterns, the same sell-offs. I don't know if you looked at that, and if you examine that a little closely, that is very bizarre that you get almost the same type of candles and same type of market reaction. This does not tell me that it's a short. It tells me that people are using the rally to liquidate, lighten their position. And at any one time, eventually, they're going to lighten their position so much over time that there is no more long position to liquidate, only maybe money to be completely taken out. So when a stock goes up and we see relative strength weakening and I see the volume deteriorating like this, it doesn't make me warm and fuzzy to want to be long a stock like a Xilinx at this point in time. So I am even looking at, from daily charts to even weekly charts, there seems to be a strong liquidation, and rather than accumulation of position, it looks to me like we are seeing distribution. So where does the money go if it leaves those particular names? Well, yesterday, the one stock that we started to see, again, relative strength and value-orientated names, meaning less expensive stocks that have fallen out of favor that no one's paying attention to because they're boring and dull. And one is Kellogg's. And the only reason we picked up a Kellogg's was because of the volume indicator over here. Looked great. It was probably, as you wanted to define, when John Person does a seminar, and by the way, that trading course that we put out over the summer school trading course, the mental mind game. And I said, make your pattern, find your pattern. What is your trade setup? And when you get a buy setup near pivot support for a stock, relative strength improves, and the volume histogram goes positive with a zero line histogram, and you get a buy setup, you should go with that name. And now we have almost nearly an 11% gain, or excuse me, 6% gain out of Kellogg's, which I think, again, Kellogg's it's a consumer staple. The risk was defined, and the upside is certainly aplenty here. Now, I think the consumer staples, a lot of the names yesterday in the trade room, I posted a name like Coca-Cola. It looks primed, KO. It generated a high closed doji. Coca-Cola, you'll notice in the, it's not down, it's not a disaster, but a lot of the consumer staple names are rising right now. Consumer discretionary, earnings season coming up. I think that, again, we took a position in Best Buy, and because of earnings, we took a nice trade. We got stopped out with a profit, and then earnings came out, and it could have gone either way at that point in time. And then what happened? It outperformed, and it kept going. Now, from here going forward, I'm not sure if I'm really willing to get back in and buy this dip right here in the market, because it seems to be more of maybe a short-term liquidation, and perhaps maybe we get an opportunity in the next few weeks to buy somewhere down into this zone. We'll find out. But right now, we are in a daily sell mode right here. We are at resistance. And, I think that Best Buy, as great as it is right now, there was a shakeup in their change-up of their CEO. I don't think that's maybe as much of an issue as it is perhaps maybe sales. There's only so many large big screen TVs that we can put in a home. So Geek Squad, et cetera, I would say this would find us better value, but this is one in the consumer retail, electronics, and appliance sector that I'm going to probably take a back seat on for right now. So where am I looking for strength and buying opportunities? Yesterday, again, I think overall we'll probably get some more upside coming out of mid. I don't know how to classify Target. It's not quite a department store. It's a grocery store, it's a clothing store, it's an appliance store, it's a general merchandise store. Target and TJ Maxx, those two names are more than likely to see, there's Target right here. Target is one that I think has a lot of potential upside. Is it under distribution or accumulation? Well, it's kind of interesting, but the market tried to pull back. I think we went through a period of pause, which again, markets go from strong trend, consolidation, and I believe this one is getting ready for a breakout to test its all-time highs. So Target, while the relative strength has weakened, it was weakened because it's gone in a sideways mode, which is corrective in nature. The volume is picking up again, and even on balance, volume is up. So Target is one that more than likely is, maybe they don't have a great reporting from the first quarter, but I have a feeling their second quarter, which the next earnings cycle, if they give positive guidance, I think that's the segment of the market that we will be focusing in on. And this is a lagging stock, not a leading stock. In other words, it didn't break out over these highs. So I think we can pick out some of the names that we like, and what I would recommend and what I am looking at even for myself and in the advisory service is to go down the list of what I see here from the relative strength person's market catcher indicator. And I want to get into stocks that are still flashing blue signs and stay away from buying stuff that is in the red zone. So a Nordstrom, a Kohl's, Walmart maybe might be a buy. Macy's is one that I would avoid right now. So I will be watchful to see if we start to see money come out of these higher flying secular names in the large cap technologies that have an incredible run, your Oracle, your Microsoft, and I think money can rotate into maybe some of these midstream retail names. So also what I see is the laggard sector, healthcare. I talked a lot about this yesterday, and I want to reemphasize biotech, IBB. And when I talk about biotech, let's take a look at today's names. Well, Bernie Sanders, president, running candidate, for president, released his taxes. Shows out that, he's making a bunch of dough being a politician. So it pays to be a politician, apparently. But his platform has been free healthcare, free healthcare, free healthcare. And, I think most people know that that's politicizing and putting pressure. Who wants to be in a sector that is having spotlight? And I think that's what has been keeping investors away from healthcare names, especially some of the larger healthcare providers. Now, we're not immune to this knowledge. Everyone knows this. I'm not politicizing everything. As you know, we had Hillary Clinton talk about high drug prices. President Trump talked about high drug prices and doing something about it. But at this point in time, look at the board and see what the new resurgence, new renaissance of strength is coming in from. It's being led by healthcare, which is the red-headed stepchild. And yesterday we came up with a couple names that we wanted to look at. And I think you can clearly see that the biotech Celgene was one name that we picked up. And if you notice that Celgene yesterday generated a buy signal when the rest of the sector was down. The IBB, the biotech sector, was under pressure, and I think that we're going to see some names come back alive in biotech and drug stocks, and I think that will be a good lift back into TNA and the Russell, and then we can start focusing back in on TNA, and that's where I think we're going to see structural changes come into the market. It's going to be a sector rotation, so I don't want to get trapped in buying large cap E-mini S&P and get long. I don't think we can sell short either, but I do think that the market at least at this point is going to see from this point going forward maybe a pause this week, especially as we get near the person's pivot resistance. So don't forget, I think it is not something that we look at and don't lose sight. I think as the market in the S&P 500, and let me go over here and share this with you. As we get closer, I'm just trying to hopefully explain without getting too confusing here, sector rotation. And when someone says that, I want to be more descriptive and say, well, John, what sectors are they going to get out of and what sectors might they go into? And I hope that was my message, that I think from a change of guard in the marketplace, at least from what I see in what runs these indices, I think that we get closer to these pivot levels in the S&Ps, and the fact that the Russell has hung back. What makes the Russell tick? Small cap drugs, small cap banks, and again, small cap energy. And that's where I think we're going to start to see a secondary resurgent out of the Russell. That's my contention. That's my kind of game plan. And I think it's coming into work. So I would be more apt as we get closer to the person's pivot resistance in the spiders to maybe sell some call spreads, credit call spreads, some short-term duration credit call spreads. That's what I wrote about this week. And to be truthful, not just truthful, but I do believe that that's still the right call. And if you go back and you look at those, the weekly thoughts and observations, expressly, let's put it back into formation here or visualization. Here's where I think you want to be focused in the market. And I said it yesterday, I'll say it again. 292 and 293, those are very strong confluence numbers. You get up near that level, I think you start looking at the 295.3 weekly May 1st or so, May option expiration credit call spreads. If you want to take in a little theta, a little time effect SPY, let's take a look here. And just to give this to you, I would go right here, not maybe the May 1st with this 15 days, but I as you can see, there is already some decent open interest, 295 to 300. It looks like somebody is already trying to play that game right there. And then as we get closer though, now is someone buying this and selling those as kind of a credit? If the market is going to get up to 293, we're at almost, let's round up 291. I think that's a target. Also psychologically, anything near 300 is a round number in the S&Ps, and we'll probably see the market back off from that level. So again, I think we've got, if it happens this week today, if it happens, if we get up near 292, 293 today, tomorrow, it's the middle of the week, Tuesday, Wednesday. You've got Good Friday, no one will be trading. Saturday, Sunday, some theta decay, some earning concerns moving forward. This might be a good spot to finally look at what? A capitulation, an exhaustion type rally, and then I think you'll see the market take advantage of those high prices by institution taking money off the table in high-flying stocks that weigh in on those sectors. Inversely, that money is going to come more than likely into the drug sector, which has been under pressure, and they have the chance to really see some performance. Yesterday, we came up with a trade idea for you guys, Alexion Pharmaceuticals. I said, look for this breakout, a trilogy type setup, a last conditional change breakout. It broke the downtrend and it gave you a buy setup. And now we have follow through strength, a daily close back above weekly daily pivots in Alexion Pharmaceuticals is a great setup for a higher time frame buy. Let's take a look. You can look at the 4-hour half day, late afternoon, 1:30 time frame, for example. If you get a close above daily, weekly pivot, it really helps to accelerate the notion that not only would this be a good breakout back above resistance, number one, but number two, maybe it's it came back and just sort of tested the area of not the absolute high, but the average of highs, or maybe a trend line resistance, if you want to, kind of call it that. And so if we get back above and form a daily buy signal above weekly daily pivots, this is one stock that I think, or at least in that space, that you can look at from a buy perspective. If we take a look at Alexion, I prefer Labu, A-L-X-N. But let's take a look. Here's Alexion. Is there any options expressed? Not a lot of option activity, but look at the amount of open interest in a May 17th expiration, 2,400, 3,000. Somebody likes the upside in open interest on call side on Alexion. They don't like the put side. Now, keep in mind, this is a stock that has just gone down, so where's the open interest on people being bearish? I think the upside is the potential here for Alexion, and that means the biotech is the one sector. If this is an A, B, and this is a B, C, and then C, D wave, we got upside and breakout potential in Alexion. So there's my 2 cents and where I think you're going to get, and I hope I gave a good explanation of when someone says sector rotation, what are they going to rotate out of and what would they rotate into? That's the key. Staples, we have a good position relative to the cost of this product, and it is in Kellogg's. Ab Marley, I'm still very hopeful in that position as well. It's holding up. And then we were talking yesterday for a pause in the market, both in Xilinx and Texas Instruments, and both of those are holding back versus the overall market today. So I think we're Johnny on the spot here. 2 sectors that you absolutely critical keep an eye on if this theme of mine is true. A, we would see Labu breakout, which is what we've been stalking, and then again we'd be watchful for the KRE regional banks to break out. And then with that said, wow, look at our position. It's nice to see it go straight up. It's 58.64, so it is a nice position to have on in a stupid little company like, I think they must know I'm going to be making boatloads of these Buckeyes with Rice Krispie treats. So as soon as Easter. But we're in at 55, 57, and it's a nice little trade there. With that said, I hope everyone enjoyed the outlook today and your algo optimizer and the yesterday, which as everyone can see in the algo trade room, the VXXB had gotten back in on the short, the SPY had gotten back in on the long for a swing trade, and it did not demonstrate to get short the SPYs as we talked about yesterday. Rather be watchful for breakouts in other segments, which again, our focus was the breakout and the buy setup in biotech to weigh on, hopefully, the Russell. And that's what we've got that theme going. I did not tell anybody that now's the time to sell short. but be prepared that on any further upside in strength near weekly, monthly pivot resistance, maybe look for a pause in the market up there. Lastly, Expedia.com, son of a beeswax. You got to admit, we're kind of Johnny on the spot in identifying stronger stocks. Now, the entry, it's just in my DNA. I can't chase markets. I look for pullbacks. So why do I say son of a beeswax? We were looking to buy what I didn't think was a bad number for a small pullback at 122.76 on Expedia, but today it's up almost $3, and Expedia is not going to pull back to our number. Celgene, anyone in their right mind who is recommending biotech when you got Bernie Sanders and the rest of the politicians screaming for healthcare reform, but yet Celgene outperformed the entire market. So I think that's important. How we trade it, maybe we need to apply a little tighter numbers and get into some directional options as well. But for that, I leave that up to you guys as well. So thank you very much. And do be mindful, lastly, if you join me in the algo room, and I'll wrap this up. As far as the euro currency, yesterday I did state really simply, if we are going to see a breakout in the market, we, after all, in the euro, if the dollar is going to perhaps weaken, we need a breakout in the euro currency above 113.70. So we did not get that. Now, join me back into the main. No, that's okay. We'll leave it at that. There's a green line in the sand. We need a 60-minute close greater than 113.70. At least a close greater than 113.70 if this is going to get any lift off. So be watchful of that. I thank you for attending today, and I hope everyone has a great trading session. Thank you.